Welcome back to the channel. In this video, what I want to do is I want to run you through this dollar franc trade that we sent our premium subscribers earlier in this morning. Okay, so this is the trade right here that we sent out to sell dollar franc at 0.9165 with a stop loss at 0.9195 and of course the 3 take profits right here. Now price is at 0.9139, so we are almost near take profit 1, which is just about 4 pips away. But whether this trade goes on to hit the take profit or not is not so important, because what I want to do right now is run you through the thought process. Okay, I want you to understand why we decided to take this trade. Now this trade might end up in a loss, it might be a big winner, doesn't really matter, because what we have to understand is the thought process. Okay, if you take this from this video and you apply it to other charts or other trading setups, you are probably able to replicate the success. Okay, but this is what you need to pay attention to if you want to catch trades like this, okay, or if you want to have a good trade setup. Now looking at the chart, this is dollar franc. Okay, so the first thing that I want you to note is that we always try to trade with the impulses. Okay, so what do I mean by the impulses? So I've actually boxed it up for you right here. You can see that this is an impulse down. Okay, you can see it's very strong selling, and then after that you have this one right here, which is not as strong. If you can see the number of candles that it takes to move from here to here, it's quite a lot compared to from here down. Okay, so that's the first thing that we saw. So we are definitely wanting to go short because we see that this impulse now is very strong. Now just take a look at this impulse right here. Okay, this right here, this big candle is a very strong bearish candle. Okay, this candle right here, just to give you some perspective, this single candle right here, it erases all the movement, or rather all the gains that were made from here to here. So if you just take a ruler and you measure it, you can see that it took about 18 bars, okay, 18 4-hour bars for price to move up from here to here, but only one single 4-hour bar all the way back to support right over here. Now for this reason, this is a very strong momentum bar, and that's why we want to go short. Now naturally, if you were to draw this trend line, you just connect this line to this line here, you can see that price actually spiked this level right here. Okay, and we were watching it, so of course we saw that candle spike here, and then we tried to enter right into here. Okay, so I think the main takeaway from this case study is that you want to always trade with the impulses. Okay, you want to find movements like this. Okay, and then when you have a big movement down, you want to look for the retracement. Now this candle right here might be a bit scary, right? I get that it's difficult to sell into such strength, but if you just follow this, okay, you see the strong movement down here, and you see another movement down here, you should have the confidence to actually take this trade right here and put your stop loss above. Again, this is not entirely foolproof. There are going to be instances where you trade like that, you trade with the trend, or rather with the impulse and the retracement back, and you know, price just goes up like that. Okay, but remember, trading is all about a probability game. Okay, if you short it here, and let's say you have your own parameters where you set in your own take profit, and you just target the recent swing low instead of the take profit that we talk about, then you can see that the risk to reward, okay, if maybe you tighten the stop loss to just above the recent high here, with this kind of stop loss, the risk to reward is very attractive. The way to say it is that you want to follow the impulse, you want to enter in as close as to the origin of the impulse. This is the origin, so you want to get as close to here as possible. Take the short. Okay, if you're wrong, you lose 1R. Okay, you lose 3% the most. Let's say you risk 3% a trade, you lose 3%. But if you are right, you're going to make 8% in this case. Okay, that's the way you should trade. You should find this kind of impulses, stick to it, manage your risk, and set it in. Okay, if you get stopped out, it is what it is. You have to take your loss, cut it. Hate to hear stories of subscribers who hold on to their losses and after that they blow their account. Please don't be a fool. Please manage your risk.